morning, welcome to End of Week News with Ainslie Bullion. It is Friday the 25th. Today we're talking Australia's 2020 economic journey shown in charts. So we will have a few graphics to point things out today, so just take the time, pause the video if you need to, and keep on reading or listening. Today we present and discuss the series of charts from Roy Morgan Research, presenting the economic impacts of Australia since the pandemic. But first, last night we saw a volatile market on Wall Street with shares eventually ending slightly up. The US dollar essentially flat and strong rallies in both gold and silver, leaving people wondering if the dip is finished or if this is just a momentary reprieve. Citibank noted these gyrations in price will continue but maintain the 2,400 target. From their report, we maintain our 0 to 3 M or million point price target at 2,200 per ounce and a 6 to 12 month target at 2,400 per ounce, while we lift the 2021 E base case gold price forecast by $300 per ounce versus our early July update to a record 2,275 per ounce. Occasional liquidation squeezes, drawdowns and profit-taking activity for gold seem likely in a high volatile market environment, but investors will probably buy that dip on the back of an accommodative central bank reaction function. Record weak gold jewellery consumption and tepid official sector gold demand may limit the performance of gold. The record pace of inflows and overall growth in bullion ETF holdings reflects strong investor appetite for gold. Greater inclusion of gold by portfolio asset allocators, especially non-traditional players, e.g. pensions, insurance, and family offices, is a further tailwind for the bullish gold thesis in the medium term. Current Fed policy and liquidity provisions have also tempered concerns about another sharp collapse in inflation expectations, so the overall gold price trend should, on balance, remain upward sloping in the current regime. Good points there. The AUD took a belting this week as the USD surged, which of course softened the blow of the metals correction in our local currency. There is plenty of downward pressure on the AUD and the Aussie economy in general. Roy Morgan Research just released a series of self-explanatory charts mapping our journey so far in what has been a year for the record books. Firstly, you can see we're still at consumer confidence levels near the worst of the GFC, after visiting territory nearly 3 times worse again in March and in April. You'll note too the gyrations during the GFC as hope is dashed by reality repeatedly before a recovery. This is these charts showing 1998 to 2020. Capturing this 2020 moment there at the end and how devastating it's been. Those at the coalface, the owners of businesses where rubber hits the road, are far less optimistic, and the trajectory is sharply down. Also shown in this next chart here by Roy Morgan Business Confidence. Current inflation expectations over the next 2 years are interesting. You will note how high they have been and still are compared to the official measure. This potentially speaks to a number of things, but likely reflects what many say, and that is that CPI is not an accurate measure of real inflation. The basket of goods and normalisations applied does not reflect what real Australians are experiencing. Another factor at play in such a survey may be the perception of inflation. By that we mean the reality of the combination of stagnant and more recently falling wages combined with rising costs is feeling more like 3.2% when the official core rate of inflation is 1.7%. Regardless, the trend is heading to deflation, which should see our sleepy or conservative finally RBA move to unconventionally stimulate, and likewise our government, putting further downward pressure on the AUD and debasing your hard-earned cash even further. This next chart here showing that inflation expectation as we've consistently moved downwards since 2010. We shared the following unemployment figures last week on the release of the Australian's great headline, everything's awesome, but in reality awful, employment numbers. This next chart here, percentage of workforce, showing unemployment, not employment, so don't get confused there. We've definitely increased our unemployment in Australia, kicking into 2020. Finally, they present the movement data for our 2 biggest cities. Whilst arguably a little anecdotal, the reality cannot be dismissed. Even model city Sydney is still literally half the visitations to the CBD than before the pandemic. Melbourne, as you'd expect, is nothing short of disastrous. This analysis is not unique to Roy Morgan. Real Vision Railpal often talks to the GPS device TomTom data, illustrating clearly the real impact on human behaviour to the pandemic. These missing trips are people not going to work. They are leaving commercial towers proportionately empty, and they are not buying their coffee, their lunch, or going to the bar afterwards. This data is actually incredibly instructive on the real impacts of this virus and why the above business confidence charts remain so bad. Consumer confidence is more fickle. Humans can get a new normal baseline as they adjust, but business looks at this unadjustable realities like P&Ls and balance sheets. This chart here showing daily analysis of movement data for Sydney CBD. See that massive drop, which clearly shows there's less people in the city. And also the movement data for Melbourne. Almost an exact reflection of the Sydney data as well. Two biggest cities, hell of a lot less people moving about inside them. Really affecting businesses Australia-wide. Well, that's news for the week, everyone. We hope you've had an interesting time. We've seen some massive corrections with gold and silver. Have we seen them reach the bottom? Or is there a little bit more to go before we have a continued upward movement? Who's to know? We hope you all enjoy your weekend, and we'll be back Monday. Make sure you visit ainslieBullion.com.au, ainsliewealth.com.au for crypto, and goldsilverstandard.com for our gold and silver backed cryptocurrency built by Ainslie. We'll catch you Monday.